Gautam Trivedi is on the show with us right now. Gautam, hi, good morning. Good to have
Hi,
you on the show
morning.
as always. Are the markers looking up? It's been a good rebound, I would say, for the last 3 days, but don't know how long it's going to last.
Yeah, I think I still believe that we've seen a huge correction in the market, and I think it was long overdue. People had been forecasting that for 6 to 12 months, and finally, when it did happen, obviously, when the event actually does happen, it does set up some degree of panic in the market. So I think we are in a a cyclical slowdown, not a structural one. And I think it's people are relooking at earnings estimates. There've been some downgrades that have come in, and there are clearly a few sectors, which QSR, for example, building materials, for example, a lot of these sectors are still struggling with overall sales growth. So I think I'm kind of glad that the correction happened. It was a little violent compared to what the market would have expected, but I think sanity seems to be coming back to some extent. But having said all of that, I still believe that you've got to focus on what's going to happen on April 2nd, which is when we get the first signs of the reciprocal tariffs, which the United States is threatening to impose on the rest of the world, including India.
Right. Very good morning to you, Gautam.
Morning.
This is Cheryl also joining in the conversation. And yes, April
Yeah.
2nd is going to be one of the most crucial days that everyone's watching out for, given the fact that this morning also you had Donald Trump speak to international agencies and talking about the fact that how they are going to look to impose the similar tariffs on India that we've been imposing on them as well. So definitely watch out for that particular segment. But like you said, yes, we've seen a violent correction, brutal one coming in the markets, which means that now we going to see a lot of spaces open up with reasonable valuations, banks being one of them. But apart from banks, where do you think value lies right now?
So, we did this exercise of running a screen on the top 1,200 stocks at the bottom of the market, or thereabouts, near the bottom of the market, which was about, say, 2.5 to 3 weeks ago. And we found that about 892 stocks, as many as 892 stocks of the 1,200 stocks had corrected 25% or more. 125 stocks had corrected 50% or more. Now, that doesn't necessarily mean the stocks that have corrected 50% or more are necessarily buys, but the fact is, it does open up a much bigger window of stocks that one could look at. And the sectors, having said that, the sectors that we still are very bullish on remain the wider power sector, travel and tourism, and even now real estate. So the good news is all of these are in huge growth mode. Valuations would stretch for a lot of these companies, but they've come off. So I think one should focus on these three sectors.
All right, so power, real estate, as well as travel and tourism theme is something that Gautam is liking at this point in time. Hi, Gautam. This is Shrishti also
Hi.
joining in. Give us some sense on the IT space as well, Gautam, because the last time we connected with you back in January, you were of the view that the valuations within the IT space are quite reasonable at this point in time. But given the correction and given the recessionary fears in the US markets, what's your current take on the Indian IT companies?
So I think the Indian IT industry, and the way we see it, is that AI is increasingly becoming a threat to at least a lower rung of the pyramid within the Indian IT sector. That sounds odd given the fact that even today McDonald's announced that they're going to set up a GCC in Hyderabad that will end up employing eventually 2,000 people. So GCCs are coming in fast and furious into India, which is great for employment. But I think this is AI, and we haven't seen the full impact of AI yet. We've seen more capex on AI, and the revenue hasn't caught up yet. So the jury's still out there in terms of what AI will eventually end up doing. But I think that concern remains a very big overhang on the Indian IT sector. So we're not necessarily bullish at this point of incrementally, even though some of the stocks have indeed corrected. AI implementation, or firms that end up focusing on that, I think will do well because even AI needs to be implemented. But in general, we're not too positive at this point on the Indian IT sector until we figure out the impact of AI.
Right. Gautam, I'm quite intrigued by the list that you actually talked about earlier, where you do see value. You were talking about power, you were talking about real estate, and of course, travel and tourism. Travel and tourism, I understand that's a decadal theme, but why power? Do you also believe that power is a structural story, or is it more a bottom up now that the stocks have corrected across the board?
No, I think it's a structural story. And if you look at even solar, so I'm actually off tomorrow to Kauda to see a solar facility. The biggest issue that I'm hearing from the wind turbine makers, from the solar companies, is that evacuation has become a challenge. So you see, if you look at every aspect of the power industry, the demand is decadal, for a really long time, because you're looking at transmission, you're looking at distribution, which the government obviously wants to privatize, the smart meter business, which is going to reduce the losses. It is fascinating the changes that the Modi government has undertaken in the power sector. And so that's one aspect of it, i.e. the electrification and the need of having more green energy. The second element, don't forget, is actually AI. I'm going back to AI for a minute. The amount of energy that's consumed by a simple chat GPT or perplexity search is 10x that of a simple Google search. So increasingly, with 750 to 800 million smartphones in use, people are increasingly turning to AI to get their queries answered, or to look for restaurants in New York, or restaurants in Delhi, etc. So as a result of which, the demand for power over the next 10 to 20 years in India is just going to be exponential. The second element of the need for power is going to be the explosive growth of data centers. The government of India has clearly told all of the social media companies, global social media companies, to house Indian citizens' data in India, to localize it. But we don't have enough data center capacity. So as that comes up, you will need even more power. And let me leave you with an interesting fact. There's been more data created in the last 3 years than ever before in the history of the world. So that just tells you how much data is out there, which is currently sitting, with your and my profiles in Palo Alto or some data center in Arizona. That's going to have to come to India over the next few years, and hence the need for power is going to be exponential.
Sure, I get that. And I think, COVID also played a huge role on when all of us sort of, got back to our devices the way we did. But Gautam, other than that, what's the best way to play the power theme right now? Would it be through financiers, or would it be through, the solar theme, etc., that you just talked about?
Yeah, so I think, let's keep, again, I'm going back to what I said at the beginning, that valuations were stretched for a lot of these companies, and you've seen a good 30 to 40% correction. Now, is the power sector, like some of the EMS companies, is that sector going to be expensive from a valuation perspective? Unfortunately, I think the answer is yes. And the reason I say that is because the growth is exponential. And when you look at a Dixon, which is growing at 90 to 100% quarter after quarter, I'm not justifying Dixon's valuations, but it gives you a sense of what the growth is. I'm not saying the power sector is growing at 100%, but this is going to be a high growth sector for the next several years, at least a decade. So my view is that you can play this through transmission, you can play this through transformers, people who manufacture transformers. I mean, there are so many multiple ways of playing this. The data center business, which effectively is like a mall business, but the fact is, again, the exponential growth that's coming in the data center business, they're not pure plays today, but you will see that coming through as well as more companies list. So I think you will see also the listed space is limited today, but you will see more companies getting listed over the next few years.
Right. Gautam, I wanted to get your view actually on the auto space, given the fact that just like the way how the IT sector now is seeing a disruption, all thanks to AI, and you did mention the fact that the lower rank IT companies are the ones that are actually facing the brunt of it. I wanted to understand your take on the auto pack, especially the companies that are actually struggling to meet that EV mark or EV demand, and given the fact that the infrastructure here is still not up to the mark when you talk about EV vehicles. What's your take on the auto space, and which pocket of the auto space do you like? That is, if you like.
Yeah, We somewhat like the auto space. Now at least you have three listed companies, which are pure play passenger cars, Maruti, Hyundai, and half of Mahindra. But my point really is that I think the auto space, from a 10-year perspective, is a long-term play. It's definitely positive. Two-wheelers, I think, are also a great way to play that space. Specifically on EVs, I think India is at a bit of a cross between whether it's going to go the America way, or i.e. the Western way, or it's going to go the China way. In China, EVs now account for 52% of all cars sold every month. So I think the infrastructure, as you asked, it's not ready yet, but it's a chicken and the egg. When you ask people, socially, that are you going to buy an EV? Some people think green and say, yes, we want to buy, our next car is going to be an EV. And the others say, but the infrastructure is not ready yet. So if I were to travel from Mumbai to Pune, how many points do I have to recharge if my battery gets low? So I think it's a bit of chicken and egg. A lot of companies, especially in the unlisted space, are putting up that infrastructure. Tata Power has been at the forefront of that as an example. So my view is that as the infrastructure rolls out, and the government seems pretty focused on doing so, you will see the pickup of EVs. And hopefully, you'll see more global companies, I guess Tesla included, coming to India and launching more products for Indians to choose from.
All right, Gautam, I'm once again referring to your comment during our last interaction, and the reason I'm doing it is I wanted to understand that how much change we have already witnessed or we have gone through in terms of the FII outlook, because you did mention that you don't think that FIIs will want to invest in the emerging markets, including India, back in January. But given the valuation reset, Gautam, do you believe that maybe now is the time when FIIs will go ahead and start looking into the emerging markets, including India?
So, let's look at a little bit about what's been going on. It's a very pertinent question that you've raised, because as I said at the outset, a lot of what's going on with EMs, and in particular India, is more a function of fund flows. It's not so much on fundamentals. My personal view is that if you look at the quantum of money that's been sucked out of Asia, in the last, since July of last year, I've seen about $82 billion of net foreign outflows from Asia, ex-China. Again, I'm not including, because China doesn't release data anymore, which they used to. So you've seen $82 billion leave. Where is it going? Yes, a part of it's definitely going to China. I mean, the HSCI, Hong Kong, the Hang Seng China Enterprises Index is up 56% in the past 12 months. So of course, money is going there. You've seen money going back into the United States. So last year, calendar 2024, the United States took in $400 billion of total flows into active and passive funds. So money is still leaving, and we're seeing the daily numbers, with the exception of the odd day, once or twice in a month. You're seeing, FIs are pretty much selling every single day in India. So as a result, I don't see that necessarily slowing down. But like I said, a lot's going to depend on how the US markets are going to do. I think, and I've told this to a lot of people, wake up in the morning and first see what happened to the Dow the night before and what's the news emanating out of the United States before you take a call on what to do in the morning.
Right. Gautam, we leave it there. Thank you so much for joining us on ET Now to talk about the market, the sectors that are looking attractive, and also where India is placed at this point in time. Thank you so much for being part of the show.
If you like this video, then like, share and subscribe to ET Now.